James Chen. He's Chief Technical Strategist at FX Solutions. James, thank you, sir, for coming in today. We've got 5 charts, currency pairs. Let's start with the euro against the dollar. James, you sent us through some fantastic charts. We had to take away just some of the analysis, but this is basically euro, dollar, May 2011 to the present right now. You say there's a long-term bearish trend in the euro, but obviously in the last month or so, that bearish trend has temporarily maybe taken a little bit of a rest.
Yes, absolutely. We see a long-term bearish trend right here as shown by these trend lines. Now, most recently from this low down here, we see a break to the upside above this trend line, and then we see a break up here and sort of a consolidation. Now, as we can see here, we're forming a new uptrend support line. And I'm looking to target possibly the 135 area if we are able to stay above.
So 135 is the upside support bound. So that's the top. What about the downside?
Well, to the downside I'm looking for, if there's a breakdown below this short-term uptrend line, I'm looking for a possibility down to 126 and 123.
Which one are you going for then before the breaks actually happen? Are you going higher or are you going lower? What's your best guess?
I have a bias to the upside. So at this point, we are in a new sort of uptrend right here. My bias is to the upside.
But still, it's a bearish trend. It's a long-term bearish trend.
Long-term bearish.
Which could send it to where, James? Which could send the euro to where against the dollar?
It could, short to medium term, it could go down to 120 area.
Which is the average over the lifetime, isn't it? That's the average over the lifetime.
And it could possibly go down there to match the long-term lows down here.
Okay, let's look at the second chart, James. This is the pound against the US dollar. And as you can see, we're going back from January this year. And you're saying there's a short-term bullish trend from $1.55. So from June, as you can see, the pound has been rising against the dollar. Just come down recently, but generally the trend since June has been a positive one, hasn't it?
Yes, as you can see, right from around 155, it has been generally an uptrend, as we can see here. From the 155 area, we see an acceleration of that uptrend. It hits strong resistance up here at 163. It's a retest of this high back here. As we can see, we've had a pullback move. It pulls back over here. This is about the 38.2% Fibonacci retracement from here to here. And as you can see, it pulls back right around the 160 area. And we see a bounce right there.
And just remind us what Fibonacci is for our viewers. That tells us that assets move by certain percentages.
Exactly. It moves by retracement. So we're looking for retracements either at the 38% level, the 50% level, or the 62% level. Here we see a 38% level retracement. We see a bounce at 160.
So 160 is key support level right now. If we break 160, where do we go next, you say?
160 to the downside. I'm looking for a possibility down to 157.50. But right now, I'm looking for a possible bounce to the upside. I see further upside here.
So are you long-term bullish pound against the dollar or long-term bearish?
Well, short to medium term, I'm looking for more upside. I'm looking for more upside.
You're looking for more upside. More upside for the pound against the dollar. Let's look at the dollar, James, against the Swiss franc, and we've had a bearish trend since late July, and there it is. There's July, and as you can see there, it's been coming down, hasn't it? Where next?
Absolutely. See, we see this breakdown here from the 99.70 high up here. It breaks down, and we're still in a downtrend right here. I'm looking for further downside here. Possibility for the 90 level in the short to medium term.
So this is for the Swiss franc to strengthen, of course, isn't it? For the dollar to weaken. This is $1 against Swiss francs. So we're around 92.50 cents. So if we stay below this trend line, we could head towards 90, you're saying?
I'm looking for that if we could stay below the trend line, absolutely.
If. Yes. Okay, let's get it on. The Aussie dollar, it's a key currency, of course, isn't it, James? It's a gauge of risk. It's a gauge of commodities.
Absolutely.
And as we can see there, the US dollar has actually been falling. The Aussie dollar has been rising, hasn't it?
Yes.
Since June this year. Where are we now?
Well, as we can see here, we do have a very nice uptrend here from the 96 level, below the 96 level. We see upside here. Key resistance here at 106. We see a retest right here. We see a breakdown of this trend line just recently, and then a bounce at the 101.50 area. It's bouncing to the upside. I'm seeing 2 key levels that we're
106 is a key level, 101.50 is a key level.
Yes.
It's a battle over which one it's going to break through. What do you think?
It's absolutely a battle. Now, I'm looking for key levels to watch. 103.20 to the upside and 101.50 as we just mentioned. Okay. A break to the downside, I'm looking for a possibility to hit parity.
Parity, interestingly.
Yes.
Interesting, Australia, I mean, you deal with the technical analysis, but of course they've cut rates, and some say there are more rates to come.
Yes.
You know, what does that mean for the interest rate differentials of the
interest rate? Yeah, for the interest rate differential, if the rates are cut further, we're looking for further downside here and possibility to parity and below.
In a word, favorite currency right now?
Favorite currency is probably euro-dollar, as many people, yes.
There you go. James, fascinating stuff. Wish we had more time to do the others, but it's been brilliant. Thank you for joining us today. James Chen there, Chief Technical Strategist at FX Solutions.